Good morning, traders. It is Tuesday, November 26th. Taking a look at the charts, we've got the SP 500. You can see here yesterday we had a big rally day in the market and held up all right into the closing bell. Today we're seeing the markets trade relatively flat, but we are seeing money continue to move into bonds, and we'll see how things unfold. Overall, the trend remains up, and the market, I do feel as though, again, is into this overbought territory. In fact, if we look at our short-term indicator here, you can see the market is right up at this red hashtag right here. The market gapped higher yesterday, ran and pushed into that overbought territory. We actually hit that territory right over here before the markets had a pullback. And then we had this kind of bearish formation, and the market has done one of their bridges, a big gap to the upside, gapping more or less above key resistance to get above it, and then to continue to push higher yesterday. It feels as though it's an exhaustion type gap, actually very similar to this type of play here where you see the market move up and then it pulled back, forms a bear flag, and then we saw a strong push to nominal new highs, and then the market sold off in a big way. And I feel as though we're similar to that, but again, the overall bias is to the upside. We are looking for some type of sharp crack to the downside to spike the VIX, but that just hasn't happened yet. Now, if we take a look over at the Russell 2000, which is interesting, it's formed this tight, you could argue here, a bull flag or a topping formation. And yesterday was a pretty insane day to the upside, over 2% to the upside. But the Russell 2000, you got to keep in mind, it typically leads the market, but it is very much so like silver in regards that it gives a lot of false signals, meaning it'll make new highs and new lows and go up and make a higher high and then make a lower low. It's doing a lot what crude oil has been doing as well, and it's really tough to trade because it gives a lot of fake signals, false signals, and breakouts. And if you look at the chart here recently, you can see some of these biggest updays, these massive updays to the upside that happened more or less right at these market tops is very similar to what we're seeing now. We're poking resistance. We broke through resistance, a huge move to the upside, and we've seen major topping formations and sell-offs happen. And what we're seeing yesterday is back to some multi-month lows on the VIX, meaning there's absolutely no fear. Investors are piling into the high-risk stocks, which are the small caps, and they're moving out of metals, and more or less they've been moving out of even utilities a bit. But if we take a look over at the chart of bonds, bonds have been moving up. And this is where the big money players are slowly shifting their money. And you can see bonds are trading higher today. They're in this little bullish formation, and we're testing this kind of resistance zone. It's a 50-day moving average. So big money or smart money seems to be slowly moving into bonds, while I think the general public is piling into the small cap stocks, expecting a big move. Now, if we look at the Russell 2000, we talk about how it can lead the market, but if we zoom back in time, you can see here while the rest of the stock market is making new highs, the Russell 2000 has broken down in a huge way, broken several key pivot levels. Even this one here would be a level, and this one here, and it has rallied up, and it's just chopping around sideways here. It's making a nominal new high here, but it keeps making these nominal new highs. But again, it's far from making new highs. So it is actually underperforming. And eventually there's going to be this really significant support zone that if this is broken, we'll see another major leg down in the Russell 2000. So it's kind of deceiving the way the Russell is moving, where everyone piled in and talking about a potential breakout here, which there is the potential that it is a breakout. We'll see if it holds today or for the week. This is a big pattern, though. It's underperforming, and every time we've seen these big pokes to new highs, they've been followed by very strong waves of selling. It feels as though the masses are just piling into the high-risk plays with zero fear, and that's when the big players step in and start selling all these shares at a premium and driving the price down, and even getting short the market for this type of play. So we are really close to that happening. And if we look at the VIX, zoom into the VIX here, you can see the VIX is bouncing down at these really significant levels. This morning, yesterday, poking down at this 12 level mark. You can see each time we've got down to this level, we've seen a very strong rally, and I'm expecting to see another one. We had it over here. We had some pretty decent pops back over here as well. They may not look huge on the chart, but they're still 10, 15, 20% pops in the market, and we haven't really had one of those quite yet. Well, we did have a little 8% pop one day, but we haven't seen a more significant one, a 10, 15, something a little more substantial, but feels as though one is very close in the overall market. Now, if we take a look over, let's go look at precious metals. Metals miners down yesterday. They continue to fizzle out, fall out of favor, just with everyone moving into equities. Eventually, this will turn around. Again, this big picture here, if we go to the weekly chart of gold, it is still in a big bull flag. We've had a nice rally, a nice bull flag. We had the second half of that rally, then it consolidated at this major resistance level from going way back in time on the charts. This was a very significant pivot high and a consolidation zone. It was a breakout here. It was a resistance level here. And it tripped there for a little bit, consolidated, whipsawed around, and then broke through it. And now we're forming this big bull flag for a potential big run to the upside. And if we throw a Fibonacci extension on just this recent move, below, up to the high, down to the current low, you can see where price longer term should be running. So we've got the move up, then we got the move down, and then we've got there, and then potentially a rally all the way up to 1733, which would put us somewhere up into pretty much through all of these highs across here. So this will be a really significant resistance area on the chart, but the overall chart is still positioned for a big push higher in due time, but right now it's just out of favor, and I feel as though we're getting real close to it being out of favor enough that it's going to put in a bottom, but we really have to let it continue to go down. It is in a downtrend. It could get ugly. We could see it dip down to this blue line. There's a lot of volume that traded through these big candle bars here. You can see the wicks. I wouldn't be surprised if price dropped quickly down into that area and then potentially got bought back up, and we start to see it form some type of base to move higher. Looking over at gold miners, same type of thing. They're holding up this pattern. If they break these lows here, this is the weekly chart. This is a nice bull flag, but if we break these lows, we're going to see some type of short selling. We're going to see some type of big squeeze to the downside where everyone gets shaken out of their longs. We could see it come down to these moving averages, which is this hiccup here, this previous high over here. And that would be this squeeze that gets everyone out because it's going to break a significant support level, and that gets everyone stops, and we could see a bottom get put in place. So I wouldn't be surprised if we see some more selling, and it could get a little bit ugly and hairy for a little bit, for a couple weeks. Remember, this is the weekly chart, and then we could start to see it recover going forward. Taking a look over at natural gas, let's move back to the daily chart. Natural gas. On Friday, I posted a chart here showing the cycle top, how really Monday, Tuesday was going to be critical for a reversal in natural gas. We got a huge reversal yesterday. This morning, we're back down 2.5%. In fact, our cold ETF, actually traded right up to our second target this morning at 31.45 is what it traded up to, which is where our second target is. So some of you probably have a potential target stop out there, and it could have got filled this morning. But overall, we are set to gap well above our first target, and we could hit both our targets this morning and close out the trade. Now, if you take a look at the resistance of these highs here going across, you can see where I put the targets. In general, we got in somewhere right over here. We almost hit our first target. Our first target is right around this yellow line here. We almost hit it because that was the level where we were going to see first resistance zone on the chart going forward based on a few different factors: price analysis, volume analysis, Fibonacci extensions. We wanted to quickly hit that target and then move our stop to break even, which if we were only off by 10 cents, if we hit it, we would have been out for a profit and out of this trade. Overall, it's pulled back. We survived the pullback, and now we're going up and we're about to hit the second target. And overall, expecting to close this trade out today. You can see we're coming right across to this resistance area. I put our target underneath this falling resistance trend line so that We don't want to have it above it, obviously, and we don't want to be near these highs as well, because this will be a much tougher area to get to. So I usually set the targets lower, and we want to get filled versus just missed. So overall today, we should be getting out of our cold play, lock in the gains, move on, and we'll be looking for some fresh new setups going forward. Taking a look over at crude oil, up 0.5% this morning. Again, it's all over the place. Huge whipsaws, couple big down days, big up days. We're just going to let it do its thing. I don't see any setups yet. To me, the big play is to the downside if it starts to roll over or give us a topping reversal sign. But at this point, not looking to play crude at this point. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.